Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Teague. Let's jump right into it. The S&P 500 and the VIX are modestly higher right now as I'm recording this video. Now the VIX is on the lower end of its range. The S&P 500 is closing up close to that 200-day moving average, right around the 4,000 level, and of course that declining trend line which everyone's been focusing on. Now just because we're having off to a good start in the S&P 500 doesn't mean the bear market isn't still here, doesn't still mean that the long-term trend is still lower. So we're still watching all that. We'd like to break out above that 200-day moving average for the bulls. Now, like I said, we're awaiting the crucial CPI data tomorrow. Right now, the market's looking at the Fed and saying, number one, we're not sure where you're going to peak at in interest rates. We're at 4.8% right now is the peak. That might be the peak. And they're also saying we expect there to be a rate cut in 2023. Powell has said absolutely no rate cuts. The market's calling his bluff. We'll have to wait and see. I think the data will go a long way in determining that. And finally, once we get past that data, we're going to have to turn back to the economy. We're going to have to turn back to earnings. Earnings are starting for the fourth quarter. We got the banks coming on Friday with Citi and Wells Fargo as a preview for the fourth quarter earnings. So we're going to have to go back and see. We have to remember a rate cut in 2023, is which the market would expect, is a signal that we have a weak economy. A weak economy might not be very good for stocks. Right now, we have the PE ratio in the S&P 500 coming in at 17. Historically, that's about average. When we see a recession, we usually see PE ratio coming in below the average. You go back to 2008. We bottomed around 10 for the PE ratio for the S&P 500, so that could be a potential big reduction still in prices. Now, if we do not have a recession, maybe we can have this soft landing and maybe the market can rally. However, if that is the case, we might not see a rate cut. So for me, it's up in the air. It's data dependent. So have to wait and see and tread cautiously, of course. For Equity Armor Investments, I'm Joe Teague.